You've probably heard the saying by the dip. Don't wait till you buy real estate, or buy real estate and wait. Bitcoin and real estate are vastly different creatures, and both asset classes are significant allocations in the portfolios of top investors. They each have their own unique benefits and drawbacks, and investors take a lot into consideration before buying them. Real estate and Bitcoin prices have changed dramatically in the last 5 years. The median home price was $313,000 at the beginning of 2017, despite some ups and downs in the years that followed. It has steadily increased since the pandemic began, rising from $323,000 in April 2020 to $405,000 by July 2021. It took Bitcoin 8 years since it first launched to surpass the $1,000 threshold in 2017. It has since had a series of surges and collapses until reaching an all-time high of approximately $69,420 in November 2021. A closer look reveals an asset that contains the potential for extremely large profits despite its erratic and speculative nature. A 5-year market view shows that, overall, investing in Bitcoin has produced greater returns than buying real estate. Meanwhile, the median price of Manhattan condos and co-ops fell to $1.1 million, a 5.5% decline from a year earlier, and a 4.7% drop from the previous quarter. The number of sales fell 28.5% from a year earlier, and 31% from the previous quarter to 2,546. California is expected to lead the market in 2021, with median property prices breaching $1 million and for cities. When it comes to real estate, San Francisco, Fremont, San Jose, and Irvine are at the top of the list, despite returns ranging from $227,000 to $440,000. They still have a long way to go if they want to beat the returns on Bitcoin. Additionally, in markets where down payments was far less than the $10,000 threshold, such as Detroit, Michigan, Bitcoin outperforms real estate in terms of financial returns. Despite the 88% rise in the typical home price, those who put down as little as $6,552 in 2017 realized real estate returns of about $28,000. In contrast, putting the same money into Bitcoin would have generated a profit of $420,570. The cryptocurrency market is incredibly volatile and changes daily, which can lead to potential profits. In crypto, transactions can be made quickly and easily, without worrying about hidden fees or taxes. Additionally, cryptocurrency is decentralized, meaning it is not tied to any specific government or organization, and is not subject to any regulations. Cryptocurrency does, however, pose a few risks. Because of its volatile nature, the value of cryptocurrency can quickly drop, leaving investors with the potential for large losses. Additionally, because cryptocurrency is still largely unregulated, it's a popular front for hackers and scammers. When it comes to real estate, the pros and cons are quite different. On the positive side, real estate is much less volatile than cryptocurrency and can be an excellent long-term investment. Additionally, all transactions are heavily regulated, so buyers and sellers have fewer risks when dealing with property. Furthermore, real estate can be used as a type of collateral, providing an extra layer of security. On the downside, the process of buying and selling real estate can be slow and cumbersome. Real estate transactions can involve high costs and taxes, as well as hidden fees. Typically, it takes a long time before you see a return on your real estate investment. Comparison of the real estate industry and crypto. When it comes to investing, it's important to compare the pros and cons of each asset. 1. Difficulty and accessibility. Cryptocurrency is relatively simple to access and can be purchased from various exchanges. On the other hand, real estate is much more difficult to access, as buyers must go through the process of finding a property, getting financing, and completing all the paperwork. Additionally, the buying and selling process is much slower than the process of buying and selling crypto. 2. Volatility. Cryptocurrency is highly volatile and can experience sharp drops in value within seconds. This means that investors are at risk of large losses if the market suddenly drops. On the other hand, real estate is much less volatile and can provide more stability for long-term investments. Cryptocurrency is still not as secure as traditional investments, as it's vulnerable to hackers, theft, and other security threats. On the other hand, real estate is typically more secure, as it's backed by physical assets and regulations. 3. Tax implications of real estate transactions. Cryptocurrency isn't subject to property taxes, so it's typically not taxed unless you sell and take profit or losses. On the other hand, real estate investments can be subject to capital gains, transfer, and property taxes. These taxes can significantly reduce your overall returns, so it is important to factor these costs into your decision. 4. Liquidity and risk tolerance. When it comes to liquidity, cryptocurrency is a crowd favorite because it can be sold quickly and easily. As with any investment, it's important to consider your risk tolerance when deciding to invest in crypto or real estate. Cryptocurrency is a highly speculative asset and can be extremely volatile, while real estate investments are typically more stable. Therefore, it's important to consider how much risk you're comfortable with when choosing an asset to invest in. Ultimately, the decision between investing in crypto or real estate is a personal one and depends on your individual goals and risk tolerance. It's crucial to research both assets and understand their risks and rewards before making an investment. By doing your due diligence and making an educated decision, you can ensure that you take the best path for building your portfolio. So as we venture forth into the vast opportunities that await, keep in mind the importance of diversification, staying informed, and embracing calculated risks. As the saying goes, fortune favors the bold, and you're well on your way to forging your path to financial success. If you find this video informative, you may also want to see the countdown to 2023 Asian Games and the global real estate market value. Thanks for watching.